I want to go over the latest portfolio calculator results, looking at drawdown entries. We like to start in drawdowns to buffer worst case drawdowns, to buffer any errors in your trading systems. And so we're going to go through each one of the 8 portfolios, look at the latest results and some of the opportunities. For example, the 200K portfolio. You can see some of the seasonality here. The last 3 years, May has been down. And so look at how this is done. The first 4 months of 2019 plus 43K. The first 4 months of 2020 plus 73K. The first 4 months of this year is plus 68K, and they all are right here in May showing down. And in general, you see some smaller Mays. This is a smaller May. In 2018, the first 4 months was plus 76K. And then it had a smaller monthly gain in May. And then some of the biggest months the last few years have been July and August. And so now is the opportunity. You see there's an $11,958 drawdown as of Thursday's close. And so let's take a look at the drawdown. Here's the equity curve. Here's the drawdown curve. And you can see here the cyclical nature of this drawdown curve. It's right here. And when it's at 0, there is no drawdown. You're at an equity peak. And then when it's off its equity peaks, nothing is always at its equity peaks unless you're in a fixed income type of investment. But in trading, you have drawdowns and pullbacks. And so you see the cyclical nature of that. That's the opportunity to manage your risk, is to look at that drawdown curve, look at your risk, and to try to time that entry. And so now could be a good time as of the close on Thursday. It is Friday's trade intraday right now, but these are the results through the close on Thursday. So cyclical drawdown, seasonal the last few years for May to be down a little bit. I don't always take 3 years to be statistically significant, but it is repeating the last couple of years. 2021 is repeating the last couple of years, and if you look at how June through August did, plus 77K in 2020, and then plus 51K in 2019, 2018 plus 58K, and so those are some potential seasonality. The past doesn't always repeat itself so far as fairly close to the last few years, and so would be great to time a drawdown and get in on those run-ups for the 200K, and that is where we are on the 200K. Let's look at the others. All 78 strategy access, 78 strategies, and it is up on the year 110, down 767.50 this month. It had a big 5-figure day on Wednesday. And so big gain there on Wednesday on the 15K from its equity peak. This one ebbs and flows, and so you can see how well it did in April, how slow it started, how poorly it did last December. And so it's a high cap. This is a portfolio that requires capital to trade. You have to have a significant amount of capital to trade all 78 strategies. The short list of 51 takes less capital. And some of our favorite strategies going into 2020, lower drawdown, a little more conservative approach. You can see where it is, 54.9750. It's actually up a little bit in May, up 32K on the year. And the 51 plus 7 new, you can see here that is in a 16K out of 25K drawdown. Down in May, and let's look at the drawdown curve. You see with higher volatility, it made a larger than historical drawdown right here in February. So we are right here right now back to a cyclical drawdown number. Could be a good entry point there. It is in a drawdown, and prefer to start anything in a drawdown versus right at equity peak. So once something makes equity peaks, which a lot of these did at the end of April, and then it pulls back, it can be a good time to start trading a portfolio or add units to it if you have the capital. This is the stock index portfolio. Did really well in April. Made equity peaks, and now it's 11K off its equity peak, down 3K on the month. The drawdown started. It made equity peaks towards the end of April. In the last few days, it had a drawdown and that has continued into May. So let's look at the, we already looked at the 200K portfolio. Here is the 50K portfolio. We want to look at next is the 50K portfolio, 10 strategy portfolio. And you see 2737.50 is the current drawdown as of Thursday, and minus 1947.50 on the month of May. So close to a good entry point. We recommend 3 to 5K drawdown for this setup to start. And let's look at the micro stock index and micro gold portfolio. This is the aggressive one. It's in a $2,600 out of $4,300 drawdown. Good place to start. Down 1,000 on the month. Had a huge April. And as you can see, May has had 3 out of the last 4 years so far are down in May. Strong June, July, August, September, October. The last few years, those are some strong months. Really, plus 26K during that time frame. In 2019, you see plus 11.8K in 2019, and then 2018 plus 12K. So consider the timing on this one to be really good as well to start or add positions. Conservative. It is near a worst case drawdown, so good timing. 3 of the last 3 years are down in May, so we see the seasonality there. And then you see how well it's done. June through October last year, plus 9,000 per unit, plus 4,000 per unit in 2019, and plus 6,000 per unit in 2018. So consider those. And you see it's in a 1788 drawdown at a 1977.50. The micros give you the opportunity to really reduce your risk by trading a much smaller futures contract. Futures trading is risky because you use leverage. You don't have to use leverage if you have enough capital in your account to cover the full value of the contract you're trading. But if you put in the minimum deposit, you are using leverage. And so the micros are 1/10 the size, and so it gives you the opportunity to trade a much smaller contract. And here is the drawdown curve, very cyclical, and it is right here at near this worst case drawdown. So had a recent equity peak near the worst case drawdown, and good time to start to buffer worst case drawdowns and any technical errors. So down so far in most of the portfolios this month, but the timing could be a good time to start trading again. Start trading the portfolio for a cyclical bounce in this portfolio based on the cycles that we've seen in the past.